And we'll do a forestation, not a forestation, rather forex sum. Take the forest assignment 2 and question number 5. So I hope that you may have attempted and come this sum. So when I'm doing, you can, check whether you have done it correctly. The people who have not attempted, just go through and see whether you can attempt it again when you go home. So question number 5. Name of the customer is not given. There are 5 subsections in the question, and referring to the forest handout 2, forest assignment 2. Right. I'll read out the first session. One of your export customers wishes to enter into forward contracts with your bank for their following transactions in euro on September 2012. An export order on DA terms payable 30 days from date of shipment, and it takes a further 2 weeks for the shipping documents to be received and the bill of exchange to be accepted. Shipment to be made during 5th or 6th week from the date of entering into contract. Likewise, you have 5 subsections, and in the next page, that is page 7, it says you are required to calculate the exchange rate for the forward exchange contracts for 3 export shipments. Describe the basis of calculation. Then Roman 2, calculate the exchange rate for the forward exchange contracts for the 2 import shipments. Describe the basis of calculation. So I given the answers all right. So that means you have 3 exports and 2 imports in that particular question. There's no cancellation being given, but we'll see how we are going to attempt this sum. Right. An export order on BA terms. This is the Roman 1. BA terms. And the tenor is 30 days from the date of shipment. Right. Now our task is to write the basis of calculation and to derive how much of fixed period you get and how much of option period. So you can take down the base of calculation. The people who have done it, of course, you can, revisit the way that you have written the base of calculation and see whether there are any adjustments to be done and do it accordingly. So the base of calculation for that particular sum is like this. Say, for this export shipment, or you can say first export shipment, right? For this export shipment, our customer has an export order on DA terms, payable 30 days from the date of shipment. This shipment is made during 5th or 6th week from the date of contract. This shipment is made during 5th or 6th week from the date of contract. That is the last line of the question. Since the date of maturity is determined from the date of shipment, the presentation period of 2 weeks, will not be taken into consideration. The presentation period of 2 weeks will not be taken into consideration. Therefore, our customer has to book forward exchange contract. Therefore, our customer has to book a forward exchange contract for 9th or 10th week from the date of contract. For 9th or 10th week from the date of contract, which is for 1 month fixed and for 1 month, which is for 2 months fixed and for 1 month option, which is for 2 months fixed and for 1 month option. Right. So hope you understood that basic calculation. Just rush the basic calculation, just what I said, and try to understand that. In the meantime, I'll explain ours as well. The date of maturity of the DEA term is determined from the date of shipment. So therefore, when the documents are going to receive is not the matter. Whenever the documents are received, we are going to calculate the maturity date of the bill of exchange from the date of shipment. So we back well. Understand? So whether it's going to take 2 weeks or 3 weeks to receive the shipping documents from the date of shipment will not be taken into consideration. Whenever it is being received, we calculate the 30 days, not for the date of receipt of the document, but for the shipment date. So catch that only this particular sum has given. So when you say 30 days, we have an assumption there, 4 weeks equal to 1 month. So 1 month is taken as 30 days. So here you get 4 weeks. 4 weeks. And when you read the question, it says an export order on DA terms 30 days from the date of shipment, and it takes a further 2 weeks for the shipping documents to be received. That part will not be taken into consideration. So you can underline, and in the handout itself you can say not taken into consideration, or in the base of calculations will explain. So there are 4 weeks in the tenor. And on the further say, the shipment is effective during the 5th or 6th week from the date of contract. 5th or 6th week from the date of contract. So that means you get 9 or 10. 10 weeks. That's why I said contract will have to book by our customer for 9 weeks or 10 weeks from the date of contract. So when you say 9 week or 10 week, that means either 9 or 10, the bank will take the most stretched fixed period, most stretched number of weeks, so that the fixed period will be extended and that benefit will go to the customer. So therefore, we will take the 10th week, and 10 week, if you divide by 4, you get 2. You get 2, right? And 2 remaining, that is 2 weeks remaining. So therefore, this you can say you book the contract for 2 fixed months and 1 month for option. You don't give for 2 weeks option, you always give for monthly form. So you say 2 months fixed and 1 month option, right? And if you manage the base of calculation in that manner, you get an additional 1 mark because of the logic of not taking the presentation period, and you get 2 marks for that base of calculation. Right. Everybody should know how to write this base of calculation at a flow itself without thinking and wasting time. Right. So we have 2 months fixed and for 1 month option. Now look at the grid. It says USD to LKR spot. Remember, we are in the export, right? We are in the export link. Therefore, we have to take the lease rates and USD LKR. There are 2 rates being given. So you take the lease rate 133.80, not the 133.90 which have been stated in the grid. There are 2 rates being given, 2 codes. So you have to take the left-hand side of the figure, which is the lesser figure for export. Now, remember, we have 2 months fixed and 1 month option. Look at the grid. If you take the 2 months fixed period, that is the 2 months swap points, it says 50/70. 50/70. So you have to take the 50 obviously because you took the left-hand side of the spot figure. So swap points also has to be swap points. Huh? Swap points has to be taken also for the left-hand side. So if you take the 50 cents, say 50 is less than 70, you add 50. You add 50, right? But before doing so, take the option period also as well, because you have the liberty of going for 2 months fixed that you have to go, and you have the liberty of going for 1 month option. So take the 1 month option, which falls into 3rd month forward. The 3rd month forward is given as 30/10. 30/10, right? So 30 is greater than 10. 30 is greater than 10. So if you consider the 1 month option period, which is the 3rd month swap, it looks like this. So therefore, you have to subtract the 30 cents. Subtract the 30 cents. So that will be rather profitable to the bank rather than going for the 2 months forward, because when you go for the 3rd month forward, you can subtract. So here I will say less 3 months forward. 3 months forward. And 30 cents. When you take the cents off, you have to divide by 100, then it becomes 30.30. So the answer will be there is 130.50, because this has to be deducted. Less. Right. So if anybody do not understand, just make a comment. I hope that I have done more than a couple of sums now. Unless you have forgotten, you should know how to do this. Nevertheless, if you have anybody did not understand, just make a comment. I will keep a note and make sure that I will simplify for them. So USD LKR spot 133.80. We have booked the forward exchange for 2 months fixed and for 1 month option. So 2 months fixed and 1 month option means 3 months. So if you take the 2 months, the bank has the liberty either to go for the 2 months period without taking the option, or taking the option and go for the 3rd month. That depends on the profitability. So in this case, I opted to go for the 3 months also as well, because if you go to the 3 months forward, the way that the swap points are being given in the sum, you can subtract. So we look at subtract means you quote a lesser rate than the spot rate, right? So my objective is served it there, right? So my objective is what? To quote the least possible rate, because you are in the export link, right? Euro to USD. What? $1.2960. Okay, I am taking the lesser figure, 1.2960. Now we have 2 months fixed and 1 month option. So look at it carefully with me. 2 months given as 0.0300 to 0.0320. So if you take 300, you add. Right. If you take the option period going for the third month. Third month says 0.200, right? 0.0200 into 0.220. So either you take the 2 months or 3 months, in this case, you are supposed to add. You cannot subtract. Why? Because the left-hand side figure of points is lesser than the right-hand side figure. Now you have to decide what you add, you get the lesser figure. So therefore, I will take the third month day hours as well. You say add 3 months for 3 months forward. And here you have to be careful. The figure being given as 0.0200. So you have to further divide by 100. So there will be 3 zeros then. 3 zeros with the 0 given here. You have to shift the decimal point to further 2 places onto your left hand side. 3 zeros and the left over is 2. Understood? So here you have to add, not subtract. So therefore it will be 2962. 2962. Right. Therefore, euro to LKR, that's the cross currency, is equal to 1.2962, 133.50. We will multiply LC to the 4th decimal point. $1.2962 into 133.50 is 173.0427 that I am getting. Uh, 173.0427 I am getting. Right, that is the answer I have given. Also in the question, in the answer, that's the answer, right? So that's supposed to be all I did. So 173.0427 is the answer. So the question they don't ask how much money that our export customer will receive. They are asking just the exchange rate. So give the answer. Therefore, exchange rate within parentheses, you are to LKR. For the forward contract that our customer will receive. LKR. Again, say LKR again. You are to LKR. You have given in the within brackets 173.0427. So I hope that you have understood. Anybody again did not understand properly? Or this why I said to attempt and come, so that when I do it, if you have done a mistake, even if you did not get the answer, so I'm curious to know where you have done the mistake. Now you are clear. But if somebody is listening for the first time without doing their homework, still they can manage it. But only thing, when you do it alone, only you get stuck. Right? So you need to do more than once to get the hang of it on these sums. Right. second one. After doing the second one, I will get a feedback from you. Just say yes or no when I ask whether you understood. Right. An export order on DA terms, 30 days site. So here the test is for you actually to concentrate the tenor. They are given in different ways of the tenor. So if you go wrong in the first one, that means you don't have a knowledge of how to calculate the tenor. So the examiner will not bother to look at the second and the third one also as well. So be careful. You have to put your logic in place when the base of calculation is concerned. Right. An export order on DA terms, 30 days site, and it takes further 2 weeks for the shipping documents to be received and the bill of exchange to be accepted. Shipment to be made during 7th or 8th week. So how the tenor is calculated? 30 days site. That means site means after seeing the documents, you have to calculate 30 days. So the receiving of documents and when the documents are going to receive is a matter to be concerned. Because if you receive the documents today, 30 days will count from today. And if it is tomorrow, 30 days will be counted from tomorrow. If it is after 1 week, it will be counted after 1 week's time. So therefore, you have to consider the presentation period of 2 weeks being given in there. That's all the difference. See here. Right. Now take the base of calculation. This shipment, that is the second shipment. This shipment is made. This shipment is made under DA terms. Under DA terms, payable on 30 days site. This shipment is made on DA terms. Under DA terms, payable on 30 days site during 7th or 8th week from the date of contract. During 7th or 8th week from the date of contract. It will take further 2 weeks. It will take further 2 weeks to receive the shipping documents. Therefore, contract will have to be booked. Contract will have to be booked for 13 or 14 weeks from the date of contract. For 13 or 14 weeks from the date of contract. Right? The tenor is 30 days site. Right? So that means it is 4 weeks. Since it is 30 days site, 30 days site means not site. 30 days site means 30 days after site. That's what it means. Right? So here 4 weeks and the presentation period is 2 weeks. And the shipment is made during 7th or 8th week. Seventh or 8th week. Right? So here is 6, 13 and here 14. So contract will have to be booked on 13th or 14th week for the date of contract. So you take the highest number of total of the weeks so that you get a more fixed period. Why is that? You stretch more the fixed period, the benefit goes to the customer. Divide by 4 and you determine what is the fixed and what is the option period. So contract will have a book for 13 or 14 weeks for the contract, which is for 3 months fixed, 3 months fixed, and for 1 month option. 40 divided by 4 is 3. 4 times 3 is 12. 2 remaining, that means 2 weeks remaining. So you are doing the whole month option period. So that's why I said 3 months fixed and 1 month option. So you get 1 mark for that base of calculation. It's a simple base of calculation, no extra logic in place, right? But you have to write this anyway, because that's how the marks are getting collated, right? So it's 3 months fixed and 1 month option. I will go to sum now. USD LKR. Spot again, I'm in the export play. Therefore, like the earlier one, it's 133.80. Now we have 3 months fixed. So look at the grid. 3 months is 30.10. So if you take the 30, you have to subtract. Why? 30 is greater than 10. If you take the option period, the 4th month, then it's 70.50. If you take 70.50, still you have to subtract 70 cents. So might as well I'll subtract the higher figure so that my answer will be less. So I will say less 4 months forward. Less 4 months forward. 0.70, 70 cents. To take the CTS, that is cents off, you divide by 100. Then that means 0.70. You are deducting, therefore it's 133.10. 133.10. Next one, Euro to USD, what? 1.2960. 3 months. 3 months is 200 compared with 220. Then you are adding. If you take the option period going to the 4th month, then you are taking 100 comparing with 80 cents. You have to subtract. So here we say less 4 months forward. 0.0001. Now this is a common mistake that a lot of students do. They know the logic, they know how to calculate, everything is all right, but when they put this figure, they put it wrong. So you have to be extremely careful. Here it says 0.0100. When you divide by 100, then there will be another 2 additional zeros comes into after the decimal, right? So 3 zeros and 1, you are deducting. Therefore, the answer will be 0.2959. So cross currency of USA, UR12KR will be 1.2959 into 133.10. Right, 0.2959 into 133.10. 172.4843. Right? Figure that I'm getting in the calculator is 172.48429. So 9 is the 5th decimal point. So since it is more than 5 or more than 5, you add 1 to the 4th basis point. So 172.4843. So this answer is supposed to be all right. So that's the answer that I have got for the question notes as well. Right? So you can say underneath the exchange rate, same what you call the same sentence what you wrote earlier also. You can say the exchange rate for the forward exchange rate for the forward exchange contract booked for this shipment by a customer is 172.4843. Similar wordings, right? So now I need to get a feedback from you on a difficult task. I hope that you understood even for the first time you are listening. But if somebody is listening for the first time, of course, there will be an issue because he or she will not know why I added that, why I subtracted. That's a different issue to discuss again later, all provided if time is available for me. Other than that, just let me know before I go for the third one. That's also easy. Just tell me whether you understood or not. Right, I'm waiting for your feedback. All right, I'm getting two people have come and said understood. That is Gerald and Vishwa. I prefer at least another one or two. If you say yes, then it's comfortable for me also then. Because I can see there are 10 people in the forum. At least one or two further say understood or say just yes, you doesn't matter. Then I can go further down. But if there's somebody who want to say they don't understand for the mere reason that coming for the first time and listening, then of course I understand. That's a different aspect. I won't be able to just now research. Other than that, if people who are here have been followed with me the first session and understood now, I appreciate that if you can give me feedback. Right. Until then, we'll move to the third one. Right. An export order on side DP terms. Again, there's an export order. An export order on side DP terms, and it takes a further 2 weeks for the shipping documents to be received and the bill to be presented. Shipment to be made during the 60th or 70th week from the date of entering into the contract. Right. So this is very easy again. You take the risk of calculation for the third export shipment. You say the caption, third export shipment, and say this shipment is made. This shipment is made during 16th or 17th week from the date of contract. During 16th or 17th week from the date of contract. It will take further 2 weeks to receive documents from the date of shipment. It will take further 2 weeks to receive documents from the date of shipment. Therefore, contract will have to be booked. Therefore, contract will have to be booked for 18th or 19th week from the date of contract. For 18 or 19 week from the date of contract. Right. So we'll do the calculation in the hours as well. It says DP site, right? Export order on site DP term. They have given the adjective of site there, but instead if they say just export order DP terms given, that we understood as site. So you didn't say DP site or DA etc. You need not say. If it is DP, it's obviously it's a site, right? So when you say site, DP site means there's no tenant. So there's no tenant, right? No sooner the documents are received, you have to demand for the payment. Right. But the documents are receiving only 2 weeks out of date of shipment. So 2 weeks has to be added to 16 or 17 week. So when you add 2 weeks to 16 weeks, 18, and for if you add the 17, then it becomes 19. So that's why I said contract will have to be booked for 18 or 19th week for the date of contract. So we take the most stretched number of weeks, that is 90, and divide by 4, that will be 4 months fixed and 1 month option. 4 months fixed and for 1 month option. So you can complete the sentence, say, which is for 4 months fixed and for 1 month option. 4 months fixed and 1 month option. Right. Right. Now again, you remember we are in the export link, so same scenario, right? So USD to LKR, what is equal to 133.80. 133.80. Now we have 4 months. Look at the grid. 4 months is 70. Comparing with 50, you have to subtract. If you go for the option period, that is the 5th one, then 9 to 70. Still you have to subtract. So higher the figure that you subtract, lesser the figure that you receive. Right. So you say less 5 months forward. Less 5 months forward is 90. 132.90. 132.90. Right. Remember one more thing. I have said this many a times, but then I did not tell today. That is, now this particular contract being booked for 4 months fixed. 4 months fixed. So therefore, when you are looking at the grid, you can't look at the 3rd and the 2 and the 1. You have to go for the 4th month first. Then the option period is the 5th month. If the contract is booked for 5 months fixed, then you have to go for the 5 months first. Then see the option period of 6th month. That's how it go. Right. So that is why straight away I look at the 4th month. Right. 132.90. Then the other rate is UR to USD. What is 1.2960. India also we have 4 months fixed. 4 months is 100. Compared with 80 cents, you have to subtract. If you take the 5th month is 200. Compared with the 180, again you have to subtract. So it's more profitable to debit, what you call deduct, 200 instead of 100. Right. So therefore, if you say less 5 months forward, 5 months forward, 0.0002, 0.0002, 1.2958. Right. Now we can calculate the cross-color CECD, the product of those two. Right? UR to LKI is equivalent to UR to USD into USD to LKR. Right? I did write this earlier. So that is the thinking of the product. Right? So UR to USD is 1.2958. USD to LKR is 132.90. So product of this will give you the exchange rate for that particular shipment. So we'll calculate that and see. 1.2958 into 132.90. I'm getting 172.2118. What is the answer that I have given? Answer is supposed to be all right in the house as well. So it's 172.2118. 172.118. Don't just copyright, right? You also calculate so that you what you call the inputting and the calculating also will be perfected. The reason why is for the method you will not get marks. Examiner will not the examiner, the paper marker will be guided with this particular answer only, right? And that answer will be checked up to the precision of the 4th decimal point. So you have to be extremely careful and calculate. So every time when I lecture, if I come across the same question, I also calculate and see. Right, 172.2118. So after that, underneath you can write that sentence the same manner that you wrote for the first and the second one. Right. And if the question asks how much of money the customer is expecting for the third export shipment, so you multiply this by the value of the shipment of the third export. Right? You multiply this by the value of the export. Right. Now the next two are the import legs. So we'll do the import leg. You see what does it say? Right, Roman 4. Import of raw material on site AC terms available with your bank as the issuing bank. Shipment to be made during 8th or 9th week from the date of entering into contract, and it takes further 2 weeks for the shipping documents to be received by the issuing bank. So very plainly understood that, right? Not difficult. Fine. So it's on site AC terms. So straight away we can write the base of calculation if that's the case. So caption will be first import leg. First import leg. Roman 4. One more thing I need to tell you: if you get sub questions like this 1, 2, 3, 4, make sure that you put the appropriate Roman question number appropriately, right? So otherwise there'll be a strain for the paper marker to go to the because there are students they do the 4th one before the first one the way that they feel comfortable for them. Doesn't matter doing like that. You need to do in order, but make sure that you put the correct number, and also to correct number of the main question also as well. Right. In this case, you say our customer will have to import. Our customer will have to import raw material. Our customer will have to import raw material on site AC terms. On site AC terms. On site AC terms. Shipment to be made during 8th or 9th week from the date of contract. Shipment to be made during 8th or 9th week from the date of contract. It will take further 2 weeks to receive documents from the date of shipment. It will take further 2 weeks to receive documents from the date of shipment. Now we are in the import date, right? In the importing country, in other words. Therefore, our customer will have to be booked. Therefore, our customer will have to be booked not have to be, take the be, that's a verb out, be out. Say, therefore, our customer will have to book forward contract, for 10 or 11 weeks from the date of contract. Right? That is understood because you have added, I have added 2 weeks to 8 and 9. Right? So that will be 10th or 11 weeks from the date of contract, which is for, you divide 10 by 4, which is for 2 months fixed and for 1 month option. 2 months fixed and for 1 month option. Now, when I say, when I'm writing this, I am explaining that you have to divide 10 by 4. You don't show that to the examiner. That's not necessary. Right? You needn't say that. And also, when I take the option period and the fixed period, then when I justify whether you're going to 4th month or the 5th month, you don't need to justify. You just straight away justify yourself and convince yourself and put the what you call calculation at the less 4 months or 5 months, like that. Right. So it will be booked for 10th or 11th week from the date of contract, which is for 2 months fixed and for 1 month option. Because when you divide 11 by 4, it's 2 and remaining 3. So 3 weeks is 1 month option. Right. So we'll do the calculation on that cost as well. We have 2 months fixed and 1 month option. So USD to LKR, a spot. And be careful now here. It's 133.90, not 80, because we are in the selling now. Now we have 2 months fixed and 1 month option. Look at the grid. If you take the 2 months figure, 2 months forward figure, soft points, then you have to take the 70 cents. So if you take the 70 cents, you are going to add, because obviously it's higher than 50 cents. If you go for the 1 month option, it's 30.10. So 10 cents, if you take it, you have to subtract. So therefore, I will take add 2 months forward and say 0.70, 134.60. Euro to USD, got 1.2965, not 60, 2965. We have 2 months fixed and 1 month option. 2 months is 320, compared with 300, you are going to add. And if you take the 1 month, it's 200, 220, again you have to add. So both instances you can add. Now then the question arises, what you should add, what you prefer to add, the higher figure. So therefore in this case, you add 2 months forward. 0.00032 0.00032 28692, right? 1.2968. So therefore, UR to LKR cross currency is equal to I have 0.2968 into 134.60. So we'll take the multiplication in there. 1.2968 into 134.60, 174.5492. 5492. Yeah, the fifth decimal point is 8. So therefore, I will take 174.5493. So this is the answer being given in there. So therefore, this answer will be all right. And you can see underneath, forward exchange contract for this import shipment forward exchange contract. No, exchange rate for the forward exchange contract. Sorry. Exchange rate for the forward exchange contract for this import shipment is 174.5493. Right? Exchange rate for the forward exchange contract for this import shipment is 174.5493. That is for €1. This particular rupees has to be paid by the customer. In other words, bank is selling at 174.5493 after 3 months' time when the documents received. Right. Next one. Import of raw materials on user sales terms payable 6 days from the date of shipment, and it takes further 2 weeks from the shipping document to be received and the bill of exchange to be accepted. Shipment to be made during 9th, 10th week from the date of entering into contract. Right. So write the base of calculation in there also. Roman 5 this is, and the import is second import shipment. For this import shipment, our customer will have to open an nuisance LC payable 60 days from the date of shipment. Payable 6 days from the date of shipment. Shipment is made during 9th or 10th week from the date of contract. Shipment is made during 9th or 10th week from the date of contract. Right. Since the maturity of the user's bill is determined, from the date of shipment, the presentation period of 2 weeks will not be taken into consideration. The presentation period of 2 weeks will not be taken into consideration. Therefore, our customer will have to book forward exchange contract for 17 or 18 weeks from the date of contract. For 17 or 18 weeks from the date of contract, right? So now you should understand well. I need not explain. In this question 5, Roman 5, it says the tenor is given as 60 days from the date of shipment. So when you say date of shipment, how long it will take to receive the documents will not matter, because we are not going to add that particular period of the time lag. Whether it's 2 weeks or 1 week or 3 weeks, or who cares? Whenever the document is received, what we do is we refer to the bill of lading and take the shipment date from the bill of lading, and from that date only we calculate the 60 days. Right? So that's why we don't take the 2 weeks there. So 60 days means 8 weeks. 8 weeks add to 9 is 17. Add to 10 is 18. So that's why I said contract will have to be booked by a customer for 17 or 18 weeks from the date of contract, which is for 18 divided by 4, which is for 4 months fixed and for 1 month option. 4 months fixed and for 1 month option. Right. So after doing that, I did the feedback again from you all. USD to healthcare. What? 133.90. Right. So we have 4 months fixed and 1 month option. If you take the 4 months, you are taking the 50 cents. 50 cents compared with 70, you are going to subtract. So we check the 1 month option also as well. So it's 90.70. Again, you have to deduct. Then if you are deducting, you have to deduct 70 cents. So therefore, we will deduct the lesser figure, higher figure will be remaining. Right. So this, now here, I am explaining you why I am taking the 4th month. So you don't need to explain again to the paper marker. I have seen certain students are, giving me some inputs. They are justifying why they are taking the 4th month without taking the option. Not necessary. I am not writing straight away, fearing that you might not understand. But you don't do the same thing to the paper marker. They know. They have the guide also. But so don't waste time of trying to prove that. Right. So again, contract will have contract being booked for 4 months and 1 month option. If you take the 4 months is 750, you are going to subtract. If you take the option period, you are going to the 5th month. This 90.70, still you are going to subtract. So you decide that you are going to deduct only the 4th month's sum. So that means next 4 months forward. Let's 4 months forward is 0.50. 133.40. Euro, USD, what? 1.2965. 4 months fixed, 1 month option. 4 months is 80 cents. You are going to subtract. You take the 5th month, look at the grade. You take the 5th month is 180. Right? Still you are going to deduct. So might have said deduct the lesser figure. So you say less 4 months forward. 0.0008. I'm telling once again, make sure that you write the top points properly when you are deducting or adding. Right? If you are not sure of what the figure is, you take the calculator and divide by 100 and see what the figure that you are getting. Then you put it. The easiest way is to shift the decimal point towards left hand side 2 places, since you are dividing by 2 zeros. Right? The 100 means 100. Right? So let's 4 months forward 8. So when you take 8 from here, it will become 1.295 Right. So therefore, you are to HCR cross currency for that particular import shipment will be 1.2957 into 133.40. Right. So we multiply that out and see. 1.2957 into 133.544 on is equal to 172.84638. So 8464 would be the correct answer. Please see what we have written there. 174.9398. So I may have done a mistake in there. Then you see, we'll have a double check on that. If anybody has spotted the mistake what I had done, you can assist me, or else I will repeat the sum again. Right. So we'll repeat the sum again, since nobody's add 10 to 8. Add 10 to 8. Yes. Very good catch. Very good catch. Yeah, even I had a mistake in there. Thank you very much. So there are two. Actually, it's a typographical error here. Anyway, the way that the sum is being given, I had to take only 1 0, right? 2 zeros there. So that means that is altogether 4 zeros. Right. So it appears like this: 0 0 0 0 8. 0 0 0 8. So that means you are taking the 4 decimal points. It will be 1. Right. So the answer will be 1.2964. So we'll do a correction here also. We say 6 and we'll say 4. Right. Now the answer would be right. 1.2964 into 133.40. I erased that. 1.2964 into 133.40. Something wrong with that calculator. 1.2960 into 133.40, 172.93976. Then I'm getting that. 93976. That appears to be right. 60 is the 50th decimal point. So the correct answer would be 172.93. 976. So this is the 50th decimal point. Add 1 here. So 172.9398. So don't show this. When I'm writing this in turn, you don't show, right? I'm just writing for it to explain 173.98. So I messed up in here. So sorry for that. And it's a good catch by somebody. And if otherwise I would have to go through the whole sum once again. I did not know where the error would have been. So here you have to be careful. That is on top of my mistake here. There are 4 zeros here. Take it to 4 decimal points. And or what you can do is you put a 0 here and deduct. And after that you fine tune for 4 decimal points. It will come to the same thing anyway. Right. Now give me a feedback, understood or not. Just say yes, that's enough. That's good. I'm getting some different names now. That was Sashini. Yes, Vishwas, thank you. Right. Tell me, they are the regular people who respond actually. Thanks once again for them. Other than that, anybody who did not understand, doesn't matter, don't be shy. Just put a nudge in here whether you understood, whether you do not have a clue. Just tell me. You have to be frank also a little bit, because if you are doing the exam, you have to pull this question somehow. So everybody understood, I presume, right? Right. So I have given you three handouts. So you can do the sums in there and try. Almost all possible variances I have done, except for an import cancellation. So I didn't do an import cancellation. I hope the question won't come, but if time permits, I will do an import cancellation also as well. So then you'll be very thorough and perfected. Right. Now today I have given you a handout comprising of the UCP 600. Is a big volume. So better if you can take a hard copy. I don't know, which are a bit too cost conscious. Of course, you keep it in the soft copy itself. Otherwise, you take a hard copy. And so we'll start on the. I have 1 hour, little less than 1 hour. So we'll start with the UCP today. So all the main areas, the core areas of the trade finance will be over by finishing the UCP. I won't be able to finish today itself. The UCP might go for about 2-3 sessions. So, so try to be with me and try to understand what the UCP says, and we'll try to do the assignments of the UCP also as well in a mild way. I don't advocate you all to drop the UCP, but if you think it's too tough sometimes, doesn't matter, you can make a gamble. Yeah, as a lecturer, I mustn't say this, but you can make a gamble provided you do the URC, you do the Incoterm, right? You have to do the Forex, you have to do the revolving facilities, right? Then you have some other 51 marks will come if that's the case, right? Because you're not quite sure, you cannot guarantee for yourself that you will get the whole 20 marks for the Forex sub. Here and there, if you do a mistake, marks will get cut, right? If you are very thorough in the calculation, still if you don't know the base of calculation, that 1 mark, you don't get it. So if you have 4 or 5 contracts, say 4 contracts, 4 marks have gone. So 20 minus 4 will be 16, right? So like same thing applies to the revolving structures also as well. So yours is tricky, you have to study. Incoterms is a bit easy, but if you study methodically, you can pull the Incoterm question very easily. UCP is the toughest of the publications, or the what you call the for the syllabus and for trade finance. So it's a what you call the. I hope that you see the in the proper side without turning around. So this is the book that we are referring to. That is uniform customs for customs and practice, right? Uniform customs and practice for documentary credit. The version we are discussing is the 600 that came to be in year 2007 July, right? The current version of the UCP is Uniform Customs and Practice for Doc Credit. Came into being in 2007, effective from July 1st, and the publication number is 600. So commonly called that as UCP 600. There are 39 articles in there, and out of which there are 14-15 articles. Sometimes the examiners are very fond of giving questions. Sometimes the questions are repeated, and so we'll see how it goes, right? So I have given you the full text of the UCP 600 in there, and I hope that you have some writing material near you, right? Right. Now take down UCP 600. UCP 600. Right? And say hyphen uniform customs and practice for documentary credits. Uniform customs and practice for documentary credits. Two 2007 revision. 2007 revision. 2007 revision. ICC publication number. ICC means International Chamber of Commerce. ICC publication number 600. Right. Now I will take the document credit cycle. In the first few sessions, I have mentioned the document credits. So we'll go in detail now. So I will put on the board the document credit cycle. And if you think there are certain vital things, you have to take it down. In a document credit, there are many parties, all right. But the main two parties, that the buyer and the seller, are known as the applicant, and the seller is known as the beneficiary. That's the first thing that you need to know. In the collection, buyer is known as the drawee, and the seller is known as the principal. But in the letter of credit or a documentary credit, why these letter of credit and documentary credits are two words? Letter of credit and documentary credits are same. It's associated with documents. That is why I call as a documentary credit, right? Otherwise, they are not too significant terms. They are the same meaning. So in a documentary credit, buyer is known as the applicant, and seller is known as the beneficiary, right? And in their sales contract or the contract of sale, the payment method is letter of credit. Payment method is letter of credit in their in the contract. So, the applicant has not termed himself as an applicant here, buyer or the importer or the customer of the bank. So this is the importer, goes to his banker and requests this bank to open a letter of credit in favor of beneficiary. The buyer is a customer of the bank and goes to the bank office and says to open a letter of credit to him. Now you know, when a customer comes and asks for a letter of credit, bank has to structure a limit for him. That part you are done. So what are the documents that the customer will give? SG application, right? The indemnity. So those are documents needed for the customer to open this thing and some collateral. So after that, the bank will structure a limit, LC outstanding limit. Bank will structure. How to structure a limit you have studied. So this bank, if it agrees to open a letter of credit, that particular bank is known as the issuing bank. Issuing bank. Then this particular customer, the buyer, becomes the applicant. That's how this applicant word has come. Right? So issuing bank now issues a letter of credit in favor of the beneficiary. So no sooner than the issuing bank issues a letter of credit, applicant goes out of the picture of the contract. Now it has become a contract between the issuing bank and the beneficiary. That's the beauty of the document credit concept, right? So seller need not worry about the applicant's credit worthiness. He can fall back to the issuing bank now. Issuing bank is a big bank. It's a body. Applicant is just an individual. It's a small company or a big company, right? So he need, fall back to the creditworthiness, rely on the creditworthiness of the applicant or the buyer or so-called individual. This bank guarantees payment to the beneficiary, provided all what you call the stipulated terms and conditions in the letter of credit which sent across by the issuing bank will be fulfilled by the beneficiary. Right. So when the issuing bank sends the letter of credit, executes the letter of credit, it won't send to the beneficiary straight away unless it's a domestic LC. What the issuing bank will do is they will execute the issuing what you call letter of credit under SWIFT formats, MT700. These things I have told you before. MT700, 700 is the SWIFT format. MT stands for message type, and this will be sent by a SWIFT alliance to a bank called the advising bank. Advising bank. Advising bank. So advising bank is requested to advise the letter of credit on behalf of the issuing bank to the beneficiary. Right? So the advising bank is just a courier one or the postman. Doesn't have any responsibilities, and there are two responsibilities leveled upon them. So that we will discuss now. And the advising bank will advise the beneficiary not only on the receipt of the LC. Now see, issuing bank, how they are sending the LC to the advising bank? By a SWIFT format. But in turn, advising bank cannot send the beneficiary the SWIFT format because SWIFT is Society for Worldwide. I stand for Interbank Financial Telecommunication. So beneficiary is not a bank and they are not in the SWIFT alliance. So therefore, this advising bank has to typograph the text what they have got in from the issuing bank. When they typograph, they have to make sure that the same wording and the conditions are the same, which is in the as in the 700. Right? Accuracy, then the wording. Accuracy in wording. And also, they have to make an endorsement when you are sending the beneficiary. That particular LC is received from issuing bank, right? And the beneficiary can rely on their endorsement. So therefore, the second responsibility leveled upon the advising bank is the apparent authenticity. So you might get called for MCQ questions, giving one and asking for the second one. So advising bank do not have many responsibilities except for these two. Right? Except for these two. Now this is what Article 9 says. Article 9 says. Right. So we have to read the Article 9, right? So, and if the advising bank finds that they are unable to reach the beneficiary, then with the least possible delay, they have to revert back to the issuing bank. In the sense, they have to inform back to the issuing bank in a more expeditious manner that they are unable to reach the beneficiary. Sometimes they will not like to advise the beneficiary for some other reason. They didn't reveal what the reason is, but they have to inform that their inability of advise the letter of credit. Right? So we'll take it down now. Article 9. Article 9. Article 9. So you can parallelly, if you have the hard print, you can parallelly check with me, or just browse the what you call the Article 9, and it says advising of credits and amendments, the caption. So you say Article 9. Say, generally, a credit, and any amendments may be advised to beneficiary, may be advised to a beneficiary through an advising bank. Right? Within parentheses say, unless it's a domestic letter of credit. Unless it's a domestic letter of credit. Unless it's a domestic letter of credit. Domestic letter of credit says both parties, that is the applicant and the beneficiary, are in the same country. So you needn't, send to another bank for them to advise the LC towards the beneficiary. Right? They can straight away send the LC to the beneficiary's address. Right? Provided that beneficiary is in the same bank. So the both applicant and the beneficiary are in the same bank. They are mutual customers. Right? So that's why I say unless it's a domestic letter of credit, but in the article that part is not there, right? Fine. Right. Also you say the advising bank, if it is not the confirming bank, advising bank, if it is not the confirming bank, will not have any responsibility, when advising a credit or amendment. Except its apparent authenticity, apparent, A-P-P-A-R-E-N-T, apparent, A-P-P-A-R-E-N-T, apparent. Apparent means at a glance, right? Apparent authenticity of the credit or amendment, that is simple A, the 1 point. Write it in point form. Apparent authenticity, that is simple A. B, those are the exceptions. B, that the advice, here the advice is a noun, A-D-V-I-C-E, that the advice accurately reflects, accurately reflects, accurately reflects the terms and conditions of the credit. Terms and conditions of the credit. Or amendment received. Or amendment received. However, if the advising bank is unable to advise, however, it might, if the advising, the advising means ADVISI, yeah? However, the advising bank is unable to advise the credit as requested by the issuing bank, it must so inform, without delay, without delay. Without delay to the bank from whom the instructions been received. To the bank from whom the instruction been received. Been received. Mostly it's the issuing bank. Right. So it's the according to the cycle. Now you understood. Once the applicant gives the LC application to the issuing bank executes the draft credit via the advising bank. So advising bank mere advises the letter of credit to the beneficiary. Obviously, he will have their charges, advising bank charges. Right. That part also you have to take it down. Those are the. I'm not doing article by article, so no need of doing the article the same manner in the book. You might have read, you can read it, right? So what I'm doing is I'm taking the article. I said Article 9, all right. And one more thing, this UCP 600 for that matter, any auxiliary publication are not formatted well. So Article 2 won't come after one like that, right? So I'm doing like a pickle here from here and there, but I'm focusing the exam paper, right? So all the matters which relate to advising bank or the advising bank question, I'll be jot down under Article 9, right? So underneath you say, when the advising bank advises the credit, when the advising bank advises the credit, they are advising bank charges. Advising bank charges as charges has to be paid. Has to be paid. Has to be paid. Either by the issuing bank or by the beneficiary. Or by the beneficiary. Next point. You are taking down, I won't say all the time next point, but the way that I am pausing, you have to put in point form, right? Don't write in paragraph form, always write in point form, right? if the advising bank charges are to be taken from the beneficiary, within parentheses say, as instructed by the issuing bank. Right, close brackets, because these charges paid off for a while. Now, advising bank charges has to be reimbursed. Advising bank incurs a charge when they advise the letter of credit. Their courier charge, their handling charge, their type of fill, overheads, and a lot of things, right? It ranges from $750 to $15. So, the issuing bank very clearly should state from whom the charges are. In the letter of credit format, there's a special provision column states charges to be collected by who. If the charges are paid by the issuing bank, then they will say claim. So whatever the charges, what they incur after advising, they will claim from the issuing bank subsequently. But if the not claim, they will say OUR. If they say claim, that means you have to take it from the beneficiary. So beneficiary, when they call over in person to collect the LC, then the advising bank will say, this is our charge, you pay the charges, then we'll give the LC. So the given LC will have the apparent authenticity, and all the same word and condition reflects the accuracy. So beneficiary will not have a worry on that. Right. So when they try to now say where they have advised the beneficiary, the LC. So they have incurred a loss while advising. After advising, if the beneficiary won't come to collect the letter of credit, then there's no way that they can reimburse the charges from the beneficiary. They are unable to collect the charges. So if they are unable to collect the charges, then the issuing bank is responsible for their charges, even though charges to be taken from the beneficiary. So that's why I said, if the charges are to be collected from the beneficiary as instructed by the issuing bank within parentheses, and if charges taken down, and if such charges are unable to collect, then the issuing bank is liable for the advising bank charges. Right. Now take letter of credit, Article 2, letter of credit. Letter of credit. Means and any arrangement. In Article 2 on the definition, you have the same wording, right? Means and any arrangement that the issuing bank will have a definite, irrevocable undertaking. That the issuing bank will take a definite, irrevocable undertaking. To honor. To honor. HONOUR. Honor. A complying presentation. To honor a complying presentation. To honor a complying presentation. So LC means it's a guarantee given by the issuing bank to the beneficiary. If the terms and conditions are fulfilled according to the letter of credit, the issuing bank will honor. Right? So if the terms and conditions are fulfilled according to the letter of credit, that means the letter of credit, the documents are complying. That's why I said complying presentation. So if there's a compliant presentation, issuing bank has to honor. So the word honor, you can't take literal word in there. So there's a different meaning according to UCP 600. So we have to find out what honor is now. So now you see honor means HONOUR, honor means to pay at sight. To pay at sight. Pay at sight. If the credit available by sight payment. To pay at sight if the credit available by sight payment. That is simple A. Then simple B. To incur a deferred payment, incur, INCUR, to incur a deferred payment undertaking, to incur a deferred payment undertaking, deferred payment means you are postponing the payment. Deferred payment undertaking, to pay at maturity. And pay at maturity, yeah? Deferred payment undertaking and pay at maturity. If the credit available by deferred payment. Deferred payment. There's a double R there. DEFERRED. DEFERRED. If the credit available by deferred payment. C. To accept a bill of exchange. To accept a bill of exchange. That is a draft, right? Draft. To accept a bill of exchange, or you can say accept a draft, right? To accept a bill of exchange drawn by the beneficiary. Drawn by the beneficiary. And pay at maturity. And pay at maturity. If the credit available by acceptance. If the credit available by acceptance. Right? Understood? Now, there are 4 types of letter of credit. Take it down. There are 4 types of letters of credit. Now you are repeating the same thing what you wrote. 4 types of letter of credit. So, Roman 1, sight LCs. Sight LCs, or you can say sight payment LCs. Right? Sight payment LCs. Deferred payment LCs. 4 types of LCs. Sight payment, deferred payment. Third one, acceptance. Acceptance. And negotiation. Negotiation. Right. Sight payment LCs. Deferred payment. acceptance, negotiation. So there are 4 types of letters of credit. Issuing bank will honor. Issuing bank will honor. That means pay at sight. Now get the wording properly. It's not just plain reading, right? To pay at sight. To pay at sight. If the credit available by sight payment, then that means what the issue bank has done in there, they have honored. They have honored. Right? Or to incur a deferred payment and pay at maturity. To incur a deferred payment and pay at maturity. Incur a deferred payment undertaking. Deferred payment undertaking and pay at maturity. If the credit available by deferred payment. Right? So what the issue bank has done is then when the documents have come and when the maturity dawns, they have to honor. You don't say that they pay, they honor. And to accept a bill of exchange, a draft, special bill of exchange, which is drawn by the beneficiary. In the case of a collection, bill of exchange is drawn by the principal. But in the case of a letter of credit, it will be drawn by the beneficiary. And pay at maturity. Except when it is available by acceptance. Right? So without saying the whole sentence, you can say issue bank honors. So issue bank honors if it's a side payment, if it's a deferred payment, if it's an acceptance. So you can take down the 4 types of letters of credit in this manner: side, deferred, acceptance, and negotiation. What is the heading here? Types of letter of credit. Letter of credit. Types of letters of credit. Right? And yeah. So you can refer to the Article 6 here. Types of letter of credit. Side payment, deferred, and acceptance. And for this, the issue bank will honor. But in these 4 types, you get the word negotiation also. If the negotiation type letter of credit, issue bank will not honor. That's what I want to tell you this. Right? That is why there are only 3 parts being given according to the honor. If the issue bank will pay at sight, is the credit available by sight payment. Issue bank will incur a deferred payment undertaking and pay at maturity if the credit available by deferred payment. The issue bank will accept a bill of exchange and accept the bill of exchange drawn by the beneficiary and pay at maturity if the credit is available by acceptance. They are all called honor. Honor. If it is by negotiation, the issue bank will not honor. Right? So in other words, issue bank can be the side payment bank or the deferred payment bank or the acceptance bank, but cannot never be or cannot ever be the negotiating bank. Right? That little part you have to take it down. That is what we are taking from that particular definition. And you say, therefore, the issue bank cannot ever be the negotiating bank. Therefore, issue bank cannot ever be the negotiating bank. To make it more emphasis, you can say within brackets, issue bank will not negotiate documents. Issue bank will not negotiate documents. That is somebody else's job. very likely in the exports desk, right? Issue bank will not negotiate documents, right? If that's the case, we have to see what is negotiation. Now the topic is, say, negotiation. 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 Right. Negotiation means negotiation means negotiation means the purchase by the nominated bank, purchase by the nominated bank, the purchase by the nominated bank of drafts and or documents. Purchase by the nominated bank of drafts and or documents under a compliant presentation. Under a compliant presentation. Now the next part is important. By advancing or agreeing to advance. By advancing or agreeing to advance. Advance what? Funds, money. Advance. Funds to the beneficiary. Funds to the beneficiary. On or before the banking day. On or before the banking day. On which reimbursement is due. On which reimbursement is due to the nominated bank. I gave the same exact word in here because it's very important, but I will explain. Right. That's what I call negotiation. So I will take up a bill of exchange. You know the bill of exchange ordinance is 1882. I did that ordinance earlier. So bill of exchange has three parties: drawer, drawee, and payee. So beneficiary issues and signs a bill of exchange at the capacity of the drawer. So here the beneficiary signs. Right? And to whom the bill of exchange be drawn? Right? Bill of exchange could be drawn to anybody. But in case of letters of credit, bill of exchange cannot be drawn on applicant. That is one point we are going to take it down. Bill of exchange cannot be drawn on applicant in case of a letter of credit mechanism. But in collection, you would have appreciated bill of exchange has to be drawn on drawee. Drawee is the buyer. Here, this cannot be drawn on the buyer or the applicant. It has to, mostly it is being drawn to issue bank, or to the accepting bank, or to any other bank, not to the applicant. Right? So we'll say drawn to issue bank. Right. So we'll give a value here, pounds, $1,000. 1,000 pounds. Pounds 1,000. So value of the AC is 1,000, we'll say million. Right. Now this is how the bill of exchange being drawn. Bill of exchange. When the bill of exchange be presented to a counter, the person to whom the bill of exchange being drawn, say A, We don't know who the A is, right? We say we presume A is not the applicant but a bank. If these particular documents or the bill of exchange or financial instrument being forwarded or submitted to A can honor, but A cannot negotiate because it is being drawn onto A. That is why in the negotiation explanation in your articles, if you read properly, in parentheses it says, negotiation means the purchase, I'm reading the article, negotiation means the purchase by the nominal bank of drafts, and within parentheses it says, drawn on a bank other than the nominated bank. So that little part has come from the bill of exchange ordinance, right? So they are reminding you when you are reading this, make sure the bill of exchange ordinance, that particular clause is there. And if the bill of exchange is drawn to A cannot negotiate. Somebody else other than A has to be negotiated. And once they negotiate, they have to claim from B. If the bill of exchange is drawn to someone, that someone is primarily responsible. That is why this person cannot negotiate. I hope that part is understood. Uh, and one more thing, will the clause is recycled here, applicant, then the body, human bank, then we'll have the advising bank. Up to this point, we wrote it. So applicant has given the LC application to the issuing bank. Issuing bank has executed their LC under MP 700. Advising bank has relayed the LC which received by them according to Article 9 of UCP 600 to the beneficiary. Beneficiary has paid their charges. Now they have to perform according to the letter of credit. So beneficiary will collate all the documents which we stipulated as requirements by the issuing bank letter of credit, and all the terms and conditions, how the documents have to be worded, everything being stated in the LC. And they will collect the documents and they will give to their banker. Maybe this bank or maybe another bank. So that particular bank is the bank will negotiate. Will negotiate. So this bank is called negotiating bank. If the customer or the beneficiary is a customer of this advising bank, initially what the issuing bank has got assistance, then this advising bank becomes a negotiating bank in that interval. So negotiating bank will negotiate documents if the documents are compliant. Documents are compliant. Now we need to know what is complying is. Right. So take it down again. As per Article 2 definition, complying means, complying presentation means, take it quickly. There are three things to be qualified. Complying presentation means that the presentation in accordance, that the presentation is in accordance with the terms and conditions of the credit. Compliance presentation means there are three things. One, that is simple A, that the presentation is in accordance with the terms and the conditions of the credit. Right? Applicable provisions in UCB 600. Applicable provisions in UCB 600. In other words, it has to be conformity to the UCB 600. Third one, the presentation has to be under international standard banking practice. International standard banking practice. International standard banking practice. If the presentation of the documents is in accordance with the terms and conditions of the credit and with conformity with the UCB standard, and the presentation is according to international standard banking practice, and these all three conditions are fulfilled simultaneously, then such presentation is called a complying presentation. Complying presentation. It's not an easy thing, right? Complying presentation means you can't just imagine. Complying means not, mirror image. It's not a mirror image, right? So beneficiaries forward the compliant presentation. Now you know what a compliant presentation is. 1, 2, 3. So if those documents are forwarded, the receiving bank is not bound to negotiate. They are not bound to negotiate, right? That little part we'll do it on the next session, right? They are not bound to negotiate, and it comes under there in Article 12. I'll tell you that. If they negotiate, if they use their discretion and negotiate, then they have to negotiate out of their own pocket. Before getting the comfort from the issuing bank, now you refer to the last sentence that I said in the definition, negotiation. I'll read out again from the book itself. It says, by advancing or agreeing to advance funds to the beneficiary on or before the banking day, this is the third phrase I want to tell you, on which reimbursement is due to the nominated bank. So, before issuing bank credits the negotiating bank, if they have paid to the beneficiary, that's what we call a true negotiation. True negotiation. Right? Now, what we say is, okay, I will pay you if I get my money from the other person. That is not negotiation. You give me a set of documents. If those documents are good, I have to take a decision. Under reserve, I have to pay. So I'm incurring a loss in there at the bank's mercy. That's what you call a negotiation. Right? So from that point, we'll stop it. Then we need to do Article 12 next time. And what do you call this, comparative applicable articles in that cross connections, right? So UCB 600 stuff you can't just understand by plain reading. It's written in article form. It's easy for me, not that easy for me, but it's understood by me because I'm a practitioner of trade. So therefore you have to listen very carefully, right? And take it down and study well. You can actually attempt the UCB 600. There are plenty of students of mine attempted the question well, and therefore it's not difficult, right? You study the way that I'm telling you, step by step, then you will understand. Only thing, you read and come the Articles 3, right? Article 3 and Article 7 and 8 and 12. Article 3, Article 7, 8 and 12, right? So then it will be easy for me to discuss. And when you are reading the article, if you can't understand a thing, just leave it. Don't worry. I'll simplify, right? I'm picking up the articles where the questions are being based. Otherwise, no point doing article to article up to the time, because it's not a trade practices session. You're not going to work in trade finance division after doing this session. You're just going to pass the exam. So therefore, we'll stop the session today. We'll meet up on next Sunday and continue with UCB 600. In the meantime, you will have a little bit of nudging me whether you need another forex sum to be done or a revolving facility to be done. And if you are silent in this manner, then I will continue with the rest of the work and finish with the USP 600 and finish the course by the semester by mid-September. Right? Then I will have at least 1 or 2 weeks to do the past papers, and I think I gave you the past paper question, what do you call the past papers years. Try to pick fetch those past papers and come, so we'll touch the past paper questions also as well. Right. So you can let me know. I'll give 1 minute and let me know whether you need to do another forest or a revolving facility, or if you are comfortable enough, it's all right. Then we'll do the. I will continue with the USP 600 next Sunday also as well.